Hey guys, welcome back. You're still tuned into Business Lunch here on CNBC TV 18. Some information that we're picking up. Sources are telling us that the NSE is holding talks with market participants on extending market hours for derivatives. So Prashant is joining us to tell us more about this. Prashant, this is really not the first time we've heard about this, but looks like there's some fresh buzz.
No, absolutely. You know, the proposal or the discussion, the debate has been around for a decade at least. But this has got fresh impetus now because we understand from sources that exchanges spearheaded and led by the National Stock Exchange is indeed speaking with market participants, brokers, small and large, to debate and discuss and get feedback about the subject, which is extending trading hours from 9:15 to 3:30 currently and beyond. Well, the discussions focus to begin with on extending the timing for equity derivative contracts, Nifty futures and the like. But of course, that is to begin with. There is no deadline or timeline by which a decision has to be arrived at. I mean, so it's a bit open-ended in that particular sense. While this is, feedback has been sought and this is at a preliminary stage, there is no to-do or a deadline to actually do this one way or the other. I mean, if they decide to do this or not. There is widespread acknowledgement, and as I said, I spoke with a lot of participants, stakeholders in the markets. There's widespread acknowledgement that any decision basically will require things like settlement, technology, and many other issues to be resolved and settled before one can actually proceed. Exchanges are of the view that any changes will be implemented in a gradual way. The implementation of the T+1 is something that was pointed out too, which happened in a gradual way, not like everything happening in one single day. They're also of the view that one of the big reasons, and this is again something we've heard in the past as well, that a lot of the volumes are getting shifted to offshore markets, like for example the SGX Nifty. This perhaps brings back volumes from there back here home. And also, the other argument being given is that this will allow and this will align markets here along with global trading and global markets. So investors and traders here will be able to react faster with global developments. And of course, I mean, it's an interconnected world in that sense. Where does the regulator stand in all of this? The SEBI in 2018 had actually put out enabling framework for timing extension. So that approval in that sense is already there with exchanges. And that basically enables exchanges to have within themselves the power to extend trade timing in F&O segment till 11:55 p.m. and in the cash segment till 5 p.m. So the SEBI sort of go ahead in 2018 enables exchanges to actually do this. Now, will this happen, not happen? It's something which we will continue to track closely. But at this stage, the discussions are on and at a very preliminary stage, a fair bit of back and forth, and of course, all kinds of views which would naturally be around a subject like this, which affects pretty much everyone in the market ecosystem. Back to you.
All right, Prashant, thanks a lot for bringing us all of the details there. Something else that we're tracking that we want to bring you up to speed with is the G20 meeting, which, all eyes are really on, and debt vulnerabilities, controlling inflation, financial stability, strengthening multilateral development banks, and regulating cryptocurrencies will all be on the agenda when the G20 finance ministers meet in Bengaluru this week. But one issue that is really likely to dominate the agenda is the suffering and disruption caused by the Ukraine-Russia war. What could be the possible outcomes of this G20 meeting? Parikshit is here with this exclusive.
Yes, CNBC TV 18 has exclusively reviewed the G20 finance ministers' outcome document, and the G20 declaration is likely to strongly condemn the war in Ukraine. The joint statement is likely to highlight the immense human suffering and elevated financial risks caused by the war. The ministers will strongly state that the threat or use of nuclear weapons is inadmissible. Sources say G20 ministers will emphasize that dialogue is vital and today's era is not one of war. But it's possible that Russia may not be mentioned in the statement at all, as the G20 works with consensus, and reference to Russia in the context of the war may not be acceptable to Russia and China. One of the big economic priorities that G20 finance ministers will highlight is the need to press for urgency in addressing debt vulnerabilities, as the global slowdown, inflation and tightening financial conditions may worsen the debt situation in emerging markets and developing economies. The ministers' declaration may emphasize on the need for coordination by official and private creditors to relieve debt distress. The meeting to call for swift resolution of debt issues in Zambia, Ethiopia and Sri Lanka as well. The finance ministers to call for agility and flexibility in policy response, use of macro-prudential policies to safeguard against downside risks. The ministerial statement that will be issued after the meeting on the 25th of February is likely to focus on temporary and targeted fiscal support to vulnerable groups while maintaining medium-term fiscal sustainability. The statement will also say that central banks shall remain strongly committed to price stability and will also focus in great detail on the need to strengthen multilateral development banks to deal with transboundary challenges and catalyzing private investments as well.
All right, Pariksha, thanks a lot for bringing us all of the details. That is going to be important to watch. By the way, for the markets, we're back in the green right now. We have come around 30 points off the low, so 17,853 is where we're at right now. We did break below that 20 DMA, but we have recovered since. The mid-cap index also completely in line, just around 20 points in the green right now. And the banks, like I was pointing out, continue to be under pressure as well. So around 27 points lower is what we have on the Nifty Bank, dragged lower by a lot of the larger names. And the Nifty PSU Bank Index is actually the biggest sectoral loser as well. We'll talk more about the markets, but we have to get into a short break now. On the other side, 2 fresh earthquakes have hit the border region of Turkey and Syria on Monday. We'll bring you all of the details on the other side.